switching yard. Nighttime in the switching yard.
Hey everybody, welcome to the Lund Loop Daily Update for Tuesday, August 18th, 2026. This is me. This is the only me that is out there. And unfortunately, there are other people out there that try to be me. One of our esteemed Lund Loop members pointed this out today. The Brian Lund Inner Circle. There is no Brian Lund Inner Circle. If you read those disclaimers at the beginning of everything I do, my only product, newsletter, service, whatever you want to call it, is the Lund Loop on Substack. There's no tiered system. There's no special double secret VIP room. There is no one-on-one mentoring service. I do not run or manage money. So if anybody approaches you on any platform saying anything like that, they are not me. So please report them. The problem is I can't report them because they block me. These stupid online services, like when you go to report someone, you have to be able to show their username. Well, they block us and we can't. So I just want to be super clear that if you're watching this, this is the only service that I have. All right, let's get to the markets. So a little bit of a rough day today. Apparently, the Iran war is back on, or soon going to be back on, and we just opened gap down. The futures just got progressively weaker last night. We gapped down. Now, I will say, for most of the day, we did not progress a whole lot lower. I mean, at the very end of the day, we just kind of popped down into the end here. But so flat day, the question is, flat day, obviously, after we gap down, the question is, can the bears do more? Right? Is that all they had? And we're going to get a pop tomorrow and we're going to reverse this, or we continue going lower? That's the big question on everyone's mind, of course. And we're one of those spots in the market that really tells you why trading is hard. Like when you look at traders, supposed traders on FinTwit, and they put up a chart and they say, you enter if it breaks here and you get out if it closes below here. And like that seems so easy. It seems so clinical. This is what I say all the time. Anybody can throw up a chart and say, this looks good, or here's a breakout, or here's a pullback, wherever like that. But it's those in-between states, right? Do we know if it is a transition or is it a correction? You don't really know, right? Because every correction starts with a transition. But it's only what happens afterwards that determines, in retrospect, what it was. It's like a recession. You have to look at it in the rearview mirror. So we're at this spot right now where not quite sure if we are correcting the beginning of a correction or we're still in the transition mode. Now, this is specific to, let's look over here, this whole dichotomy I've been talking about for months now between AI infrastructure stocks, chips and memory, and software hyperscalers Mag 7, right? Today, I posted this earlier in the day, and you could see there was a lot more damage being done in that former group than in the latter group. So what I'm trying to figure out is, are we still in that mode here? So let's take a look. Let's take a look at a couple examples that tell you why it's so hard to trade consistently and profitably. So let's take a look at IGV, right? If you've been here for any amount of time, you know that this has been a big theme of mine. Software stocks. And we had these names that just got hammered, starting from their highs in October of last year. AI is going to replace all software, and we just sold off. We had a bounce, double bottom here. That's when we started getting a little more aggressive on some of these names on IGV. And so we're right at a long-term downtrend. Now, if I look at this chart, there's really nothing wrong with this chart. Okay, this is this is an ETF that's gone from 86 to 106 very quickly. It's run into some resistance right around the trend line. It's pulling back fairly orderly. It's just at the first pullback level, the 23.6. Okay, fairly narrow range today, a little bit below the 8-day. Okay, it's right at the perfect spot where it could bounce, right? If this is just a pullback, in what's going to continue to be an uptrend, meaning a trend that's going to break above here and then break this pivot and change this downtrend, if that's what's eventually going to happen, right now, there's nothing that is arguing with that, right? I mean, we can get all the way back into here for sure. I mean, technically you can get down to the 50% range, but like you get back down into here and it's still a regular pullback before it might turn and go up. Let's look at a couple names in this space. Let's look at Path, first of all. Look at Path, okay? Path has come from a low of 10, basically, up to 17. So up 70% from July 23rd to August 13th. So is that 3 weeks? 70% in 3 weeks. You would expect there to be a pullback. Where's it pulling back? It's pulling back right at a big long-term downtrend where you expect it to. It's a very orderly pullback. Again, we're not even at the 23.6 level. We're above the 8-day moving average, right? There's nothing in here that says this move is over. It just says it's correcting a little bit. How much will it correct? Will it correct down into this area? Maybe. Let's look at Palantir. Palantir, which went from a low of 120 to a high of 180 in basically that same time frame, maybe even less time frame. Let's see, Friday 31st to 2 weeks. All right, 2 weeks has gone from 120 to 180, 50% in 2 weeks. And what's it doing right now? It's pulling back in a very orderly mode. It's not even at the 8. It's way off of the 23.6. It had massive volume here when it broke out. It broke a trend line. Okay, so there's nothing in these stocks that says there's any problem, right? At least on the top end as I look at this. Now, let's look at what could be the problems. Well, you could say, hey, there's kind of a little bit of a double top here, at a resistance level. Like, okay, that's still not a big deal, right? Look at all this selling off that it has to repair. And look how aggressive this move is. I'd say that's no big deal, right? Here's the big deal. The big deal is over here. All right, the big deal is that we have a market today in which the Qs sold off almost 2%. The NASDAQ futures were down 500 points. And yet we go back and look at Palantir, and what was Palantir down? Palantir was down 0.5%. That's pretty good relative strength. Path was down about 2%. It's still pretty good relative strength. IGV was basically flat, okay? You look at a lot of names on the other side of that ledger, right? Names in that infrastructure space. Look at AAOI, down 15%. Look at Vishay. If I can find it. There's always two Vishays here, right? Look at these things. These things are selling off, 10, 15, 20% today. So good relative strength. Here's the problem. Is this what's happening? Everyone knows this meme, right? This is the Grim Reaper coming down the doors. We've seen it before. You put individual names on those doors, or you put industries on those doors, or you put sectors on those doors. The question is this sell-off the beginning of something that's going to take everybody down eventually? And that's why trading is so hard, because when you look at these names, you go, well, nothing wrong with this name, no matter what the market's doing. How about this? How about if you say, you know what? I think in a year from now or 2 years, whatever your time frame is, I think Palantir is going to be at all-time highs. I think it's going to be at 350. So are you willing to hold through a pullback? And how much of a pullback? I mean, no big deal to pull back here to that gap, the 143 area, if you think it's going to be 330 in a couple of years. So not only do you have the movement of individual names, right? Then you've got the movement of individual sectors. Then you have the overall market. And on top of that, you have your own time frame. So there are so many nuances when it comes to being a consistent trader. It doesn't matter what your strategy is. It doesn't matter. Like, you can be a short-term trader, long-term, intermediate term. You can be a swing trader, position trader. It doesn't matter. You have to put all these pieces together time and time again and make sure you're not missing anything, because all it takes is 1 or 2 times to be out of whack on those things, and you can blow out so much work. And this is what we try to do here at the Lund Loop every single day, right? It's not just throwing up charts and saying, oh, this chart looks good, or, oh, this would be a good buy right here. It's putting all those puzzle pieces together. What does the market look like from a risk on, risk off standpoint? That overarching macro, right? Then we go through all the ETFs and sectors. We say, what do they look like? And then we go through individual names. And ultimately, our watch list ends up being the best indicator of them all, because it's a natural filtering system, right? By the time you get down to the watch list, our 3 watch lists, the daily setups, the considerations watch list, and the active sequence watch list, they're going to be the distilled results of what's going on in the market. I'm going to broaden this out for one more point. Okay, I don't know anything about software. I know nothing about software. Okay, I don't even know what Path does. I've got a position in Path and I don't know what they do. Okay, so why am I even trading these things? Well, I'm trading them because I know that the narrative of all software is going to be destroyed by AI. That just doesn't make any sense, right? It makes no sense from a logical standpoint. I don't know anything about software, but I know that makes no sense. Now, for short periods of time, the market can be irrational, and it has been irrational when it comes to software names. But I know they're not all going to go away, right? So which names are going to go away and which names are not going to go away? Again, I don't even know how to post a JPEG on a friggin' website. Like, how am I going to tell what software names are going to survive and what aren't? I believe price is going to tell me. That's what I believe is happening right now. I believe price is telling me which software names are going to survive or have a potential to survive and which aren't. And so that's why I follow price. I don't have to know about software. It's the same thing with our watch lists. Our watch lists are distilling down from the macro of all the markets and everything that's going on in the indexes to the sectors, to the individual names, to the individual setups on the charts. They're telling us, hey, you don't need to know about this, this, and this. All you got to do is focus on this. And that's the whole purpose of technical analysis. That's the whole purpose of reading charts. That's the whole purpose of having a risk-first methodology, is like, I don't know all that stuff, all that macro stuff. It's all interpretive. It's all subjective. I just want a filtering system that says, hey, here's your best shot to make money in the next 1 to 3 days or 1 to 3 weeks. You don't have to focus on anything else. And when that list is full and there's a lot of plump fat pitches, as I mix my metaphors, we take some shots. When there's nothing on the list, when they're fallow, we step back, right? And that's just what we try to do here every day at the Lund Loop. So if you are not a full subscriber to Lund Loop, we would love to have you become a part of our community. Remember, no mentoring, no VIP room, no one-on-one. I won't come wash your car, but you'll be a part of probably one of the best communities out there, a community that is really dedicated to helping each other. I tell you, I go to some of these other chat rooms, these other Discords, dumpster fire. I mean, seriously, you get in there and your head hurts, and it's nothing like that in the Lund Loop. We are I'm so blessed to have a respectful, supportive, knowledgeable. I mean, there are thousands and thousands of years of experience in our trading room. And I'm very happy with what we've created here, and we'd love to have you as a part of it. So goodbye, free subscribers. Now we're going to go into the paid subscriber section.